The pivot is here. The central banks are now flipping. Well, at least some of them. I'm going to show you today what's happening. I think it's extremely important. We've all been waiting for this moment, and perhaps here it is. Let's look at the Bank of England intervening in the bond market after historic sell-off. You probably saw this information already, but I'm going to give you the full details of what's happening. So essentially, the bond market started to go wild. Things started to go crazy in these last few days. The government initially said, we are not going to intervene. This is not the time. At the next scheduled meeting, we're going to do some stuff. And then what happened? Seemingly hours later, they came out and said, we are going to intervene in the market. So I'll show you that right here. This is the statement right here, directly from the Bank of England website. As the governor said in his statement on Monday, the bank is monitoring developments in financial markets very closely in light of the significant repricing of UK and global financial assets. This repricing has become more significant in the past day and is particularly affecting long-dated UK government debt. Were dysfunction in this market to continue or worsen, there would be a material risk to the UK financial stability. And I want to stop there just to highlight the fact that this was so bad, it would have turned over the entire financial system in the UK. And then what happens? Well, you have those reverberations. So this is really important and it's really big, more than what many are making it seem. This would lead to an unwarranted tightening of financial conditions and a reduction of the flow of credit to the real economy. So essentially saying what we're going to do is we're going to print the money and we're going to buy bonds. They just started to do QT, quantitative tightening, actually pulling back on the amount of money that they're printing. They were increasing interest rates. And what do? They completely turned around in no time. This is unbelievable, and it means that your currency is ultimately doomed. Now, will other countries start following suit? I will show you today that that has already started to happen, and we have to keep our eyes on the Fed, of course. Let's look further into it. It's extremely unusual for a developed market currency to weaken at the same time as yields are rising sharply. Of course, we're talking about the UK here. But this is exactly what has happened since the new chancellor's announcement. And what was that announcement? Is basically the fact that there's going to be tax cuts, there's going to be some things to stimulate the economy. They saw the stimulation as being inflationary. So here we are. We worry that investor confidence in the UK's external sustainability is being eroded fast. It shows that the Monetary Authority has lost control of an important dimension. They want to loosen policy so rates go down at the same time the currency weakens, but they basically lost the power to do that. And that's what happens in an emerging market. So this is very worrisome, of course, as you see time and time again, what has happened with these currencies. And guess what? You print too much money, you create imbalances, and they always fail. Will that happen for the UK today? I don't know, but we're kind of seeing parity across the board, whether that is the ECB trying to pump out their nonsense euro. You look at the UK with the pound and the US dollar. Are we going to see parity across all three? We're almost there. Looking at that way, I mean, it's unbelievable. Pension funds would have faced mass defaults today without the Bank of England's action. I want to make myself very clear, this is how serious it became. Bank staff worked through the night on Tuesday and into Wednesday morning to prepare the unprecedented package, which will see it buying up potentially limitless number of targeted government bonds. That's how big this really was. Truly. The Bank of England's dramatic intervention today was a response to a run dynamic emerging in the British pension system, which could have resulted in the collapse of a swath of institutions within hours. That's how big this was, okay? So you have this domino effect that occurs, and people aren't aware of it. They don't really understand how it all unfolds, but this is the truth, and this is the case right here. Now, that was the UK. Could that happen in the US? Could it happen in Canada, Australia, or anywhere else? Absolutely. We are seeing an extreme situation, but it's not, some small country with a small economy and so on. This is happening in the UK right before our very eyes. Okay, it just basically talks about the bank staff working here, financial consequences, and so on. But of course, what happened initially? Look, they said that they were going to stimulate the economy, and they didn't like that. They don't want to stimulate the economy, but they like quantitative easing, let me tell you. Okay, there's more to this, but basically the fact that this was about to fail, and I think it's extremely, extremely critical to watch what other countries are doing. Bank of England joins Japan. We now have three groups. The ones suppressing rates at the cost of their currency, Japan and the Bank of England. The ones protecting their currency and at the cost of their bond market, like the US and Brazil. The ones letting their currency and bond market collapse, ECB and others. So these are the groups, but will they all go in one direction eventually? That certainly seems like it. Now, what happened in the UK that was becoming a problem rapidly? And that was, as mortgage rates were increasing, it puts additional pressure on those who have a variable mortgage. And you can see the statistics right here, 26% have a variable rate mortgage. This would ultimately be disastrous as the rates are rising. Then you go to refinance, and now you're left with a rate that is significantly higher than it was before. Puts a lot of pressure on people, let me tell you. Plunging markets spur new intervention warnings across Asia. Here we go. Bank of Korea to buy up to $2.1 billion of sovereign debt. Indonesia and Japan have stepped in to defend their currencies. So you can see it for yourself right here, ladies and gentlemen. It's happening before our very eyes. Now, these are limited situations, no doubt. I'm not denying that. However, could this be the beginning? And if it is, when does the Federal Reserve say, I want a piece of that? When do we start buying up all the assets? China asking funds to limit stock sales before Congress. And of course, you see this here, happens many times, in fact. But essentially, they take control and say, don't sell anything now, okay? Because we don't want any big sales. We don't want the markets to fall down. And we have the ultimate control. Here comes the pivot. You can see it for yourself. Let's talk about it, because the Bank of England intervened in the collapse of the bond market that was taking place. But don't worry, it's only temporary, just like everything else the central banks do. Oh, I'm sure it's only temporary. This will actually prevent inflation from coming down, and there's no stopping this cycle now. So they cannot get inflation to come down to that target of 2%. All the central banks have the same target for some reason. Maybe they say it's going to be 3% or 4%, and we'll see what happens. But you can't stop the cycle of money printing. Once you get in, you can't get out, okay? Other central banks around the world are intervening in their markets now, but all eyes are really on the Fed. That's the way it works. Then we have this. If many central banks stop raising interest rates and actually do a U-turn, well, then the Fed might have that go-ahead to do so. Okay, they might follow suit with that. I'm not sure how soon that will happen or what's going to be all the details surrounding it, but I'm definitely keeping an eye on it. And then, of course, we have this. It creates permanent inflation. When you get into this cycle, you create permanent inflation. And in fact, if it continues and gets worse, then you have hyperinflation. So real assets become even more important to own to offset the currency devaluation. If that's happening to you and where you live, you own real assets. And then, of course, you protect yourself. That's the way it goes. There's more depth to that. I talked about it in my books. I've got the videos on the channel, of course, but I think it's important that we understand what real assets are. You know, you look at that as anything basically physical and tangible. This could be something like precious metals or real estate or, even business. So many different things that are actually real, and that usually does well over a long period of time when you look at it to protect your wealth. That's just the way it goes today. We got some ups and downs and wild swings, but we've got to know, we've got to be the one to basically say, okay, well, where am I going to be in 5 years, 10 years, 20 years down the road, and where do I want my assets and the allocation? You got to think about that. And that's all. If you appreciate this message, you definitely want to subscribe to the channel. It's right down there below. Take care.